Talking about technical analysis and tools like authors often come to mind. Famous indicators such as Mahdi, statistician, come first. But there's actually one excellent author who helps us analyze the chart more accurately even than the first three. That said, it doesn't get as much attention as the most popular tools in this category. So it's about the Wonder Theater, or Bill Williams Theater. It is more commonly referred to as shadow. And this indicator, it covers the shortcomings of other popular theaters. For example, indicators and statistics only show us bounces off charts, potential moments where the chart will bounce in the opposite direction. The indicator, on the contrary, is larger. The crossing of the line shows us at what point a short or medium-term trend may start. And the indicator, in contrast, is suitable for both tasks. He will perform well for us both in the fleet and on the schedule. Let's get to its study, what it consists of. In order to add it to the chart, we need to go to the Indicators menu and select from the list of technical tools that are available on the platform. As soon as we add it, I already have it added. We don't change any of the settings. Fine-tuning has been applied here. This is an indicator that is part of the Bill Williams system, and usually we do not touch the indicators from the Bill Williams system. There they are, pretty well set up specifically for the fact that you can work with them immediately and do not adjust to any charts or such strategies. Here, among other things, a unique formula is implemented, which helps us to find both trend reversals and moments of probable bounces at the same time. As you can see, the indicator, it consists of a program. This program, with red-green posts that are below zero or above zero. What does the indicator show us? It specifically shows the moment of the graph. The moment. This is the effort of the chart, i.e., the upward movement or the downward movement. In that case, when we have candlesticks in red color, it shows us a bearish momentum. What he is showing us is that the chart is now moving downward rather than upward on average. And the green bars of the program show us that we're bullish, we have momentum on the upside. This suggests that specifically now, the chart is showing momentum to the upside. We have the liquidity to grow. And as you can see that the columns of the columns change regardless of the zero line. So we have a chart, and sometimes we have a chart that crosses the bottom line from top to bottom, bottom to top. But the color of the columns doesn't depend on it. The color of the columns shows us the change in momentum. There's a moment that is. The moment we're likely to have is a chart bounce. Specifically here, we had a bearish momentum until a certain point in time. And after that, this momentum started to fade. This is where he stopped. And now the momentum has turned bullish. And these are these moments of color change, moments of reversal, investor sentiment in the market. And the momentum of the chart reversal, like right here, where bearish momentum changed to bullish momentum, and right here, where bullish momentum changed to bearish momentum. We had a rise and then a correction after that. Now let's look at the zero line. The zero line shows us the relation of all these atomic movements to the overall long-term trend of the chart. And when we talk about trends, strategies, about working in a trend, we are not concerned with changing the color of candlesticks, but with their crossing the zero line when we have a chart crossing the zero line from bottom to top. This suggests that we now have a long-term trend forming in the market, and it may be worth considering an uptrade. Conversely, when we have a chart crossing the zero line from top to bottom, as in this moment, then specifically, after crossing the zero line, we may need to consider an entry for a trend down. I have already said that the tool works well in both stock markets and trends. Let us now look separately at strategies for the new market and separately for the new market. Naturally, in order to understand our particular market, we need to first look at the chart and determine the current market structure. I'll remind you that we have a trend in the market where we have constant highs and lows being updated. Well, here we are. When we have a local bullish trend, it means we have a local high. The local high is now higher than the previous high. The next local high is higher than the previous high. We can say we're trending here. Same with the minimum. We have a local low, a local low, a low above the previous low, a local low, again, above the previous low. According to these local minima and maxima, we can build a new channel, and it will be diagonal. That is, The chart is clearly moving upward. Then we can say that there is an uptrend in the market. Same with the downtrend. Here we can determine the structure in the same way by updating the low and high. So we have a local high. The next local high is lower than the previous one. Same with localized lows. They are also lower each time than the previous one. And by these local lows and highs, we can build a new channel, and it will be directed downward. Here we can say we are in a downtrend. So once we first identify the market structure, what do we have? We can see that we are in either a bearish or bullish trend. Now we can move on to the signals. And when we have determined that the market is trending, we only need to look at the zero line crossing and nothing else. If we have determined a bearish trend, we wait for it to cross the zero line from top to bottom. That's what's happening in this moment. Here we entered the trade and would have traded down and made a nice profit. Conversely, when we have determined that we already have a bullish trend on the chart, we wait for a reverse signal. That is, when our AO columns cross the zero line from bottom to top. It happened in this moment. This is where we have an entry point on the trade, and this is where we would trade it and make a nice profit. We are in the case of the zero line, precisely behind long-term moves, up or down. Let us now turn to the situation in the Navy, fleet. I'll remind you that this is a situation where we don't have a clear trend, up or down. The graph just fluctuates. The high and low are at about the same level. We call it a fleet situation. And when we determine that we have not a trend in the market, but a fleet, which by the way, the market is in almost 70% of the time, basically you will see exactly these kinds of movements, then we are not looking at the zero line anymore, but at 100 grams. When we have a color change from red to green, we see that as an up signal. For example, right here, we had a pretty good upward signal. We'd be making a profit here. When the color changes from green to red, it is a down signal. That's exactly when we would have taken a trade down and made a nice profit as well. And so, all the while we have a moving schedule in the fleet. That's up to this point. We can still consider it a fleet. And specifically here, we would, for example, open a trade down then when the chart would change from red to green. At that point, we would open a trade up. As you can see, it is a very easy indicator to interpret. But here again, it is very important that you need to determine the market structure beforehand. If we have a trend in the market, we trade it as a trend. That is, we look for signals by crossing the zero line. When we're in the market, we're looking for a signal. Depending on the color, the light shows that we have changed from bullish to bearish or from bearish to bullish at this very moment. It is a very simple indicator and it works well. Unlike many other tools, it works great in both trend and fleet. Since these are indicators of the Bill Williams system, I recommend you use it with others. In combination with other Bill Williams indicators, such as an aggregator or an indicator. And in that case, we'll give even more synergy, and then the signals will be much better. As I said, we don't care about market structure. We can trade at any point in time. Therefore, in general, the indicator can be used on different assets, on cryptocurrency, on currency pairs, on commodities, and so on. The general rule is that the higher the time frame, the less signals you will have, but the better their quality. And the lower the time frame, you more move into new strategies, and you will have, of course, more signals, but their quality will be less. And furthermore, I wouldn't recommend trading shadow on receptions lower than 15 minutes. Because if we switch to a very low frame, we will see the program change very often. Here, each candle is 1 minute. And as you can see that in 5 minutes, you may have maybe a few color changes, and that will often give you negative signals. This is such an indicator. Quite simple, quite intuitive, but still effective. And I advise you to try it in your trading.